I don't think we're at the bottom yet. But when you hear more and more people saying that, because by the way, they said that in 2018 as well, after the highs in 2017, it was 20,000, it went down to 3,500, and you had tons of people saying, oh, forget about it, it's old, it's done. And then what happens? It goes to 69,000. So you look for those contrarian indicators. And again, the belief is there's enough young people, especially, that understand the fiat currency issues out there, and they are into the digital age now, where they're not just looking at gold, but they're looking at these other currencies, essentially cryptos.
Hey guys, welcome back to the channel. Today we have Gareth Soloway forecasting Bitcoin's next move, as well as his take on the economy. Soloway says to remember that crypto is not an isolated space, so you need to stay informed on what the Fed is doing. It's also important to watch the price of the dollar and even to stay on top of the stock markets. As Jerome Powell's attitude during his press conference was very peaceable and said hiking is done, this will mean more money in the system, which is positive for Bitcoin because more money will be able to be invested into it. Soloway is worried because Bitcoin is still a leg down and we're going through inflation and recession. Also, there have been uncanny similarities between the crash of the dot-com bubble and Bitcoin today, which, worst case scenario, will lead to a complete washout of the entire crypto space. Let's listen to this interview with Gareth Soloway as he predicts where Bitcoin will go in the next few weeks and how inflation will continue to affect the market. Don't forget to like and subscribe if you enjoy what we do here on this channel. Let's get right into the video.
So I think that's the big thing, and this was a shock to the U.S. equity markets, is you basically got the 75 basis point hike, which everyone expected. That was not a surprise, but the statement was unbelievably hawkish, in fact, guiding the market that they're even going to continue to be aggressive into year end, basically upping where they're saying interest rates will be by year end. And that shocked the market. And this was such a wild day because that statement alone dropped the market precipitously. We saw about a 2% drop in the S&P in the matter of 20 minutes. Then Jerome Powell did his press conference. And in the press conference, he kind of was ever so slightly open to letting economic data dictate. And all of a sudden, the market just ripped higher. And we saw the markets go all the way to new highs of the day. So now we've rallied basically up 3% to the upside. Now, all of a sudden, the markets started to redigest what he's been saying. And they're like, wait a minute, we're not going this way. And the market sold off and made new lows of the day, basically dropping over 3%. Wow. Ending at the lows of the day. It was a day for the ages. And I'll show you guys here what the chart looked like on an intraday basis. This is the 10-minute chart. You can see starting here, it was real quiet. So all day long, everyone was just waiting. Here's where the statement came out. And so we were up on the day. This is where we closed the previous day. So the markets were up. We sold off from 885 down to 820 on the S&P. So, I mean, that was a big drop, $65 drop or 65-point S&P drop. We then rallied all the way back above 900 to 907 and then closed down at 3789, 3790. So one of the wildest days I have seen in the equity markets in terms of whipping the markets. And again, it sets us up for just probably a pretty crazy day tomorrow where the markets are trying to really figure things out.
Soloway believes that the economy will decline into a worsening recession and ultimately the Fed will begin to print money again to compensate. He predicts that this printing will create a domino effect that will lead to an even worse recession. This decline in the economy will in turn create an opportunity for Bitcoin to increase and essentially go from being a risk-on asset to being comparable to gold.
I mean, this is the kicker, right? And I've said this before. I think the Fed to me has always been behind the curve, whether it's when they're printing money when they really shouldn't be, or when they're tightening out of panic because of inflation in this scenario. And I really, if I could talk directly to Jerome Powell, I would say be very careful here, because now you've raised 3 times in a row 75 basis points. You're guiding that you're probably going to raise another 50 in November at least, maybe another 25 into December. And we haven't even seen the full effects of the higher rates yet, right? So the economy still hasn't digested all of that. And you have to be careful here, because with interest rates, rising, and inflation's still high, if we go into a bad recession, and let's say we go into a global recession, which it looks very possible we will, how do we get out of that recession? If you think about it, every past recession, the Fed's printed us out by lowering rates, quantitative easing. But with inflation at, let's say, even if it comes down to 4%, they're not going to print us out. They can't, because it would send inflation soaring again. So it's a very tricky scenario, and I think the market is starting to be really nervous about that aspect. And that's the worry that I have, is that they're going to put themselves in this box by over-tightening too quickly. By the time all of these rate hikes kind of are digested in the economy, then they're going to find out too late that they've sent us into a bad global recession. And then at that point, we're going to all look to them and say, oh, can you guys print? Oh, wait, we can't print money because inflation is still elevated at 4%, let's say. So it's a really scary scenario where we could see, in my opinion, it's very likely we'll see a protracted, like a long-term bear market that could last for 5 to 10 years. And it just could be nasty. I mean, it's a scary scenario. I think you still got to think about gold as the kind of a safety play here. We'll talk about that obviously in a little while. So nothing's changed, unfortunately. In fact, the hawkishness of the Fed is exactly what Bitcoin doesn't need right now, and it's pushing it lower. So if I show the Bitcoin chart here, what we can see is that you've been hammering on this level over and over again. This is back in June, in late June, or excuse me, this was, June, in early July, in mid-July, and then over here in September. And look at what's happening on this candle today off the Fed. It looks like we're starting to break lower. Now, we will have a little support at the June low of 17,500, but if that gets broken, then there's not a lot of support until you get to like 13 to 12,000. And I think it's looking more and more like that is going to be the ultimate outcome here. So for me, there's no question that it will exist. The question is, how long does it take to get regulation out there where institutions start to feel comfortable investing in it? So there's always going to be this need and this trust that Bitcoin, there's a run of 21 million. And so therefore, it's not the fiat currency that is the US dollar, is the yen or the euro or any of these other currencies that the governments can just print nonstop when they want to stimulate. And so I think you have to look at it like that. And you have enough big money, the Michael Saylors and a bunch of other players that have drawn enough attention to it. And then you have countries like El Salvador that have adopted it as kind of a currency there. I do think that it will survive, but it's going through its dot-com bear market, right? So if we think back to the dot-coms, you had the Amazons of the world. That stock went from basically 112 to about, I think it was about $6 or so. So a 95% drop. And it's very likely that we're going to see that on Bitcoin. The fact that people are saying, they're beginning to say, oh, it's not going to be in existence anymore, that's exactly what I want to start to hear, to believe that we're close to a bottom. I don't think we're at the bottom yet, but when you hear more and more people saying that, because by the way, they said that in 2018 as well, after the highs in 2017, it was 20,000, it went down to 3,500, and you had tons of people saying, oh, forget about it, it's old, it's done. And then what happens? It goes to 69,000. So you look for those contrarian indicators. And again, the belief is there's enough young people, especially, that understand the fiat currency issues out there. And they are into the digital age now, where they're not just looking at gold, but they're looking at these other currencies, essentially, cryptos.
Soloway says that we are in a bubble, and when the bubble disintegrates, everything gets destroyed. He has seen this before and is already alarmed with how hard Bitcoin has fallen. Soloway says there is no good endgame in the market. Everything will only destroy the economy in the long term. Soloway says that investors need to be aware that there will be a massive reset where the dollar will collapse. So far, all markets, including Bitcoin, have had an expectation that CPI numbers will decrease. But he warns that if the CPI numbers go back up, there will be consequences to the market that will lead to a sharp decline, and sell-offs will continue to increase. What do you guys think about Gareth Soloway's take on the markets? Do you agree that it's a wise time to take a percentage off the table? Let us know in the comments below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.